Good morning, everyone, and happy Tuesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. To start off, I want to let you know about the exciting launch of TipRanks TV. This will be a video streaming service right on the TipRanks website that has all the great content you can expect here, plus other exclusive content as well. So head over to the TipRanks website or tipranks.com/TV to check it out and let me know what you think in the comments down below. Now, of course, this morning we'll be taking a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button as well. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning as markets continue to feel the pressure from the Ukraine and Russia conflict. Delegations from Ukraine and Russia did speak and agreed that they were open to further talks. Currently, Dow futures are down 0.64%, S&P 500 futures down 0.7%, and NASDAQ futures down 0.75%. Multinational oil and gas company SHEL has announced that it'll be exiting its joint ventures with Russia-based energy firm Gazprom and related entities. These operations include a 50% stake in the Salem Petroleum Development and the Geden Energy Venture, as well as a 27.5% stake in the Sakane LNG facility. The company also plans to back out from the Nord Stream 2 pipeline project following Russia's invasion of the Ukraine. The British firm expects to record impairments as a result of this decision. It had non-current assets worth approximately $3 billion in these ventures at the end of last year. The SHEL stock is currently rated a moderate buy with a slight downside of 2%, with most recent ratings all having an upside potential. John Deere has completed the acquisition of 3 factories from its joint venture with Hitachi. The company has signed new license and supply agreements with Hitachi Construction Machinery. In addition, the two companies have terminated their joint venture manufacturing and marketing agreements. Despite the termination, the factories will continue to manufacture Deere-branded excavators and forestry equipment, but they will cease manufacturing Hitachi-branded products. Deere will assume full control of the design aspect of its excavator portfolio products, and it will also carry out feature updates, allowing it to respond rapidly to customer requirements. The Deere stock is currently rated a moderate buy with an average upside of 20%. And shares of TDOC were on the rise yesterday after they announced they were joining forces with Amazon to make basic healthcare services more convenient and accessible. They'll be launching an Alexa-powered telehealth calling feature. The launch of general medical virtual care on Echo devices will allow customers in the U.S. to connect with TDOC care providers. The virtual healthcare service on Echo devices will initially launch via audio, with video visits expected soon. The integration will allow customers in the U.S. to connect easily with doctors and access high-quality healthcare services. By simply saying, "Alexa, I want to talk to a doctor," on a supported Echo device, customers will be connected to a TDOC call center. Their stock is currently rated a moderate buy with an average upside of 35%. Now moving over to notable earnings reports. In the pre-market this morning, we'll be hearing from Workhorse and Baidu, and in the after hours from AMC, SoFi Technologies, and Salesforce. Already in the pre-market this morning, we heard from Target. They came in ahead of analyst expectations for earnings and stated that they expect growth to continue well beyond the pandemic. The company forecast revenue growth in the low to mid-single digits and projected adjusted earnings per share to rise by high single digits for the year ahead. Earnings per share came in at $3.19 versus the $2.86 expected. Revenue just slightly missed analyst estimates at $31 billion versus the $31.39 billion expected. Analysts currently rate the stock a moderate buy with an average upside of 33%. Last night, we heard from the Lucid Group. Their shares dropped after posting worse than expected results for their fourth quarter. Yesterday, their stock closed up almost 10% in anticipation of upbeat Q4 results and on the company's announcement of building a first non-US manufacturing plant in Saudi Arabia. The company delivered 125 EVs as of year-end, but their Q4 revenue came in at $26.39 million, missing analyst estimates of $36.7 million, and their Q4 loss of 64 cents per share was 29 cents worse than the analyst estimated loss. Their stock is currently rated a hold with an average upside of 26%, with the most recent rating being a sell with a downside of 44%. We also heard from Zoom, who did come in ahead of analyst expectations on earnings and revenue, but the share dropped on disappointing future guidance. Their Q4 revenue came in at $1.07 billion, surpassing analyst estimates of $1.05 billion and also coming in 21% higher than the year before. Their Q4 adjusted earnings of $1.29 was 24 cents better than analyst estimates and was up over 5% year over year. Looking forward, however, that guidance disappointed. Their adjusted earnings were projected to be between 86 and 88 cents per share for Q1, which was lower than the consensus of $1.05. The stock is currently rated a moderate buy with an average upside of 49%. Now let's take a look at which stocks are this morning's biggest gainers and losers. All of our biggest gainers or losers this morning are moving in response to their recent earnings reports. Our biggest gainers this morning are led by 3D Systems. Under the ticker DDD, the stock is currently up 12.4%. They're followed by Target under the ticker TGT, who's up over 11%, and TaskUs under the ticker TASK, the stock is up 8.8%. Our biggest losers this morning are led by GoodRx Holdings. Under the ticker GDRX, the stock is currently down nearly 35%. They're followed by Ambarella under the ticker AMBA, who's down 19%, and Lucid Group under the ticker LCID, the stock is down 12.6%. So that is going to be everything for Tuesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you all so much for watching. I hope you have a fantastic day, and I'll see you back here next time.